Today I'm going to run through my favorite Metastock scan to identify low cap specky stocks which have consecutive days of rising volume. As you may know, insider trading is hard to pin down, but everyone suspects there is plenty of insiders buying up stock before various price spurts. The trick is money always leaves clues, and when it comes to investing in stocks, those clues we look for are rising volume. Think about it. If someone has great news about a stock and they want to get in, then they're going to have to talk with their money. In this case, they'll be wanting to buy more shares. So this particular scan looks for consecutive days of rising volume. In this example, I'm going to be using the Australian market. So this scan is looking for the volume today to be higher than yesterday, and the volume yesterday to be higher than the volume of the day before. Let me bring up the actual scan here. So as you can see, the volume today is greater than the volume of yesterday, and yesterday's the day before, and so on. Also have a turnover gate in there, so the volume has to be turning over more than $45,000 worth in the last 9 days on average. So every day for the last 9 days, $45,000. So although we want specky stocks, we want to be able to get in and out of that stock. And then you can see also there's a price gate of 1 cent up to $2, and we also want the close to be greater than the open. This will indicate a bullish day on rising volume, so that's pretty handy. So I want to show you two examples on this particular stock here. Obviously this stock has risen quite rapidly. Now I'm going to give you an example where this has worked really well, of course, but the whole idea is to say that, well, money does leave clues and smart money does leave clues, and that is in rising volume. So as you can see, there's two really significant run-ups here from 20 cents to 50 cents in a couple of days, and then again from around 40 cents all the way up to nearly, touching on 80 cents there over the course of about 2 weeks. So back in February 2018, you can see that there were 3 consecutive days of rising volume there, and this shot up through the roof. Likewise, back down through here, just in that section there were a couple of days of rising volume. So let me take a look at a couple of examples so you can see what we're looking at here. Now I actually did a scan back in May, so the 2nd of May, just to have a look to see what we could find here. So back in May, just on the 2nd of May, these particular scans were done. So on the 2 days preceding that, that was when we had 3 rising days. So May the 2nd is the 3rd day of rising volume. So as you can see, a little bit of a price spurt there. What else have we got? Let's have a look at VHT. These are all low cap specky stocks. So May the 2nd, okay, so you can see here we had 3 rising days of volume just through there. It did fall down quite quickly from there and then rallied going ahead from there. And you can see the volume coming in after that point. There was a significant amount of volume relative to the preceding period there. Let's have a look at another one, SXL. This particular one, May 2nd again, there was 3 consecutive days of rising volume just through there, and then it went on to rise quite nicely with good volume after that as well. And what about last one, just one more, Probiotic, and once again back in May, 3 days of rising volume just through there. You can see just in this period here, and then it's gone on to gain maybe 50% or so from that period, from about $1 through to $1.50 there. So as you can see, it's a pretty interesting scan, but it's one that you might want to have a play around with, in particular the price gates and also the turnover gate. If you're trading the American market, then the turnover is going to be completely different to the Aussie market, as you can appreciate. Likewise with the price steps and those type of things. But keep in mind, it's just highlighting opportunities. These, you wouldn't be taking and buying every single one of these, because that's not the whole idea of it. You want to make sure it meets your other criteria, no matter what you might have there. And of course you can backtest this, but it would be very difficult to backtest given how open the criteria is. In particular, trying to find these things, you wouldn't want to take every trade. So do keep that in mind if you were to run a backtest through Metastock. It's more about highlighting stocks that might be of interest to you, and to try and see and confirm where that smart money is getting into particular stocks. So hopefully you like this video and it gives you some ideas on scans that you might want to run yourself. And if you do like this video, then please give it the thumbs up. And of course, if you'd like to, subscribe to this channel, and we'll send you some more tips and tutorials on trading the various markets. Thank you.